The man of the moment from the company of the moment, Rajesh Jejurikar, Executive Director and CEO, Auto and Farm Sector at Mahindra Mahindra, with us on the show. Mr. Jejurikar, good morning and thank you so much for joining in. And it almost seems that the Diwali at Mahindra Mahindra started on the 3rd September evening and it will well last until 31st December at least.
Well, I hope, firstly, thanks for having me on the show. And I hope this is a Diwali which lasts much longer than 1 quarter. Because, I think this is a very fundamental shift in the way consumption and growth can happen. And, we've always been of the belief that the automotive sector needs the stimuli and the taxation because India has always had the highest taxation. To really exploit the opportunity that India has. And this is a really, really good move towards that. So, we are really excited with this. And it's, as the Prime Minister said, the Diwali offer for customers. But I really think this is the start of something really big.
Good morning, Mr. Jejurikar. Tamanna here. I think the big relief has been that electric vehicle taxation has been kept as is. And just getting that overview from you. There was some concern that EVs above 20 lakh rupees would be taxed at a higher rate. In terms of intent and what it has pointed to, do you think that EV adoption can only grow from here?
Yeah. So Tamanna, I think the government, we've been hearing from government sources for a long period of time, and which is why we've gone through the process of investing very heavily in the electric story, is that EVs is the destination technology for the country. And the government has stayed with that policy guideline. Many of us, Mahindra and some others, have invested very actively because we believe it is the destination technology. So staying with 5% is a very good signal. We've already seen as new products have come in from us and some of our competitors, the EV penetration for us in the last quarter was 8%. That means 8% of our SUVs that we sold were electric. And for the industry last year, that was 2%. Now it's 4% for the industry and 8% for us. So EV penetration is clearly on an upward path. And the 5% GST will be a strong enabler to a continued growth momentum.
Mr. Jejurikar, good morning. Hiral on this side. We're talking about the positive impact in terms of tractor and equipments on small cars and commercial vehicles. A quick clarification when it comes to high-end SUVs, because you're talking about a tax rate of 40%. What portfolio in terms of M&M that gets impacted? And is that a major one where you would see a price hike that could be coming in?
Sorry, it's not a price hike, Hiral, because the products which are going to be at 40 were right now 48%. So the way to think about it is it was 28% GST plus, let's say 20% cess, so 48% on an average in that category product. So the 48% taxation, total taxation today goes down to 40% total. So even in that segment, there is 8% gain.
So would that mean there would be some bit of a benefit to consumers as well from here on? And does that increase the potential in terms of demand?
Yes, it does. So, if you look at our complete portfolio, just as a quick recap, so tractors gains from 12% GST today to 5%, so 7% gain there. Our commercial vehicle portfolio, and especially LCVs less than 3.5 tons, where we have a very strong presence, market share of more than 50%, gains by another 10% drop, so 28 to 18. And then we have an SUV portfolio which will gain between 8%, which we spoke about, to some of our SUVs will get the benefit of a 13% gain. So overall, every part of our portfolio will get a gain. There's no change in EVs, which is good news, but everything else we get a benefit.
Jejurikar, I read in a note, and best, you, in some sense, you're the best analyst for your company, so I'm kind of asking this to you. The note said that 2/3 of the M&M portfolio will be at 40% versus 50% with cess, balance at 18% versus 28% slab earlier. Would that be a nice summation, more or less accurate about what the impact is for your overall piece?
Yeah, so the Neeraj, multiple analysts are covering it differently based on what they are adding or not adding. So let me just play this out again so there's no confusion. Roughly in our total portfolio, that is auto and farm, which is all under M&M Limited. Tractors constitutes roughly 35-40,000 a month. That gains 7%. In the 18% slab comes all our pickups, so which is LCV less than 3.5 tons, and that's about 20,000 a month. And now when you look at the SUV portfolio, so non-electric, so the ICE SUV portfolio is roughly 40 plus thousand a month. Of that, 40% will be in the 18% slab and the balance will be in the 40% slab. But even the 40% slab is a drop of 8% from 48 to 40.
Just trying to understand, Mr. Jejurikar, if let's assume the sales were to remain as they are, I mean, and they will increase, but I'm going with a base case scenario, right? And maybe it's too soon, but is there some sense that investors or viewers can have about what could the potential earnings impact at status quo sales be for a Mahindra and Mahindra?
What do you mean potential? So the margin profile does not change irrespective of what happens to GST.
Because you pass it on, right, agree.
Because we are going to pass it on, right? So there's a very clear understanding that we would have that when the government gives a GST benefit, it is to improve consumption, to drive growth in the economy, and we would pass on everything that that the government has given.
Mr. Jejurikar, I'm just wondering if you're seeing this as consumers maybe uptrading. Even as GST rates will come down and will increase and boost consumption or appetite in those segments, will you also see an uptrade? Maybe someone who was not looking at a higher bracket SUV will now look at it more closely. Do you expect those kind of upward moves to happen through the portfolio?
Yeah, I think that's very well articulated and we would expect that to happen. And I think that's a combination of 2-3 things. One is customers today, operate around combination of 2 things, price point and what's the monthly EMI outflow. So, if a customer, I'm just taking an example, if a customer is in a mindset of, I want a product which is priced in the range of 18 to 20 lakhs. Now, versions or models of ours which may have been marginally or a little above that would come into an 18 to 20 lakh price point, which is the budget a customer was operating in. So we would expect customers to upgrade, as you said. Also, what's happening is interest rates are coming down. The affordability from an EMI perspective goes up. So it's a combination of lower acquisition price and lower interest rate, which I think will help customers move up the value chain as well.
Right. Mr. Jejurikar, I know this is too early to ask, but taking into consideration the benefits that do flow in, analysts are of the opinion that there could be earnings re-rating that could be on the cards as well for a lot of auto players and other sectors as well. For M&M, where do you see it from the initial expectation of what the company could have delivered in FY26 versus the bonanza that has come in now? A ballpark number, back of the envelope calculation, what's the upgrade that you're looking at?
Yeah, firstly, we think this is a long-term move. There are, in any transformation, there are transition issues, and there will be a set of transition issues, right? So this kicks in only from 22nd September. So the ability to increase volume in this period of time by way of either capacity or even absolute production from what we planned is very negligible. There are the supply chain lead times are way more than that. So, it's unlikely to see a significant gain in this financial year. This is more really about next year and the long term. What this will enable is various OEMs across sectors to think about investment in a much bigger way because it will increase the longer term growth outlook for the economy. which we believe, with the move of this kind, can start hitting 8% plus GDP growth rate with time, and that will be an enabler for newer investments. I am not sure at this stage whether this is going to have any significant impact in F26. We were already on a very aggressive F26 growth number of 15 to 20% or mid to high teens, as we had called it, for our SUV industry, for our SUV business.
Got it. Mr. Jejurikar, one final note, simply because you are present as a group across multiple consumption segments, right? I heard you say that you hope that this Diwali lasts beyond December. Most certainly it will. But do you sense that the consumption uptick can be materially higher because of something like this? Because in some sense, it is not similar to any past cycles, right? We've had a GST cut mid-year. It has been much better than what most people penciled in. Can there be a very big positive surprise on the upside? Is it possible to kind of think about it in the current cycle?
Neeraj, my view is yes, that's really what the government intends, and all of us as participants in this industry and economy should think about it that way. We have to think of how this significantly improves momentum in the market. How do we capitalize on it? Not just through price action, which is happening now, but investments in new products, more aggressive marketing to get consumption up. So we really have to think about how does this help drive growth for the country and our companies, and make the best out of this opportunity.
So much for speaking with us this morning and laying out with such clarity what gets taxed at what rate from your portfolio. I think exciting times are here, and congratulations on how the limited edition just flew off the shelves, which you launched recently. We were just comparing to what numbers we are seeing for Tesla so far. I'm sure you won't comment on that, but it's been an interesting one to see a homegrown EV getting that kind of reception. Thank you so much for speaking with us.
Bye-bye.